What's going on, everyone? It looks like we may be reaching peak inflation levels as the new CPI and PPI data comes out this week, as well as new loan application data and interest rate trends. So I'll be walking you through the forecasts and what those could mean to you as buyers and sellers in the coming months. Plus, I'll cover a couple stories that have me a little worried about where things may be heading for the real estate in 2023 and beyond. Those stories and more are coming up in today's weekly market update, so let's get started. Hey, thanks for joining me today. I'm Rick Harrison with MVP Realty in Southwest Florida, and on this channel, I bring you the latest market news so you can make better decisions when it comes to buying, selling, and investing in Southwest Florida real estate. If you're new to the channel, welcome, and if you haven't already done so, please consider subscribing and hitting that bell so you don't miss out on the latest data, tips, and news keeping you ahead of the market trends. Well, first, I want to address the day we had in the stock market. If you haven't looked at the market or your portfolio, I'd recommend not. But the market was hit pretty bad today, as I've been saying they probably would be for the last couple months. And I don't think we've hit rock bottom yet either, but who knows anymore. As for the local market, inventory continues increasing, and it looks like that trend is no longer just local, as we have some national stories on that and more. But let's not waste any time. Let's start off with the 7-day local market data. All right, so let's get into the 7-day market update. This week we had new listings at 922. That's up from 907 last week. It only went up 1%, but still, as the trend continues, we are seeing more listings coming on the market than we have in the previous months. So that trend is continuing. That's now 7 weeks in a row we've seen new listings coming on the market over the previous week. Sold listings went from 1328 last week to 1161 this week. That's down 13%. Again, this is a double-edged sword because we are seeing less homes sold. One, because less homes are going pending. Part of that is due to the inventory shortage. Obviously, the lower and less homes there are on the market, the less people will be buying them, obviously, right? So that's one side of it. But the other side of it is, as interest rates rise, buyer demand has been falling even more. So that both of those things are contributing to the solds decreasing. And then, as you can see, this week pendings are at 1184. That's down from 1259, so that's down 6% again. Again, same thing, double-edged sword. The thing with solds, the solds, is that that's indicative of what has happened 30 to 45 days ago. I say that every week, just to remind you new viewers. That is a lagging indicator. The leading indicator is the pendings, which is down. So we are seeing demand falter a bit over the last several weeks now. And again, when we look at the price decreases, we went from 560 to 539. That's down slightly, but it's still at the highest levels it's been since we really restarted in the pandemic. 560 was the all-time high so far over the last 2 years. 539 is second only to last week. Moving on to the current inventory breakdown. So single families, we went from last week 2620 to this week 2758. So that's up 138 new listings on the market for single families. Condos, which is everything else other than single family homes, that went from 1336 last week to 1436 this week. That's up 100. So we had a net gain of 139 in last week's market update. This week we are up 238 additional on top. So we have been compounding the new inventory every week. And this is what is currently active on the market right now. Multifamilies up very slightly, only up 3 from 108 last week to 111 this week. Not too much of a change, but still 100 is off of the lows that we were seeing about 5 to 6 months ago, which were in the 60s and 70s. Foreclosures, last week we went from 38. This week we're at 29. So that's down 9. Again, have not seen a huge influx of foreclosures coming on the market. So although that has been increasing nationally, we really have not seen too much come on the market in the Southwest Florida region. So I did get a request last week for my video to do a breakdown of year-over-year inventory in comparison to the years prior to the pandemic. So I broke down the chart. This took me quite a while to put together the chart because I had to get an entire chart of data and then pick out the specific months that I wanted to use instead of throwing up, 40 different months. So as you can see, the orange, the chart in orange, or the part of the chart that is in orange, is the number of active listings. And as you can see, going all the way back to January of 2019, through January of 2020, you can see that the inventory was actually hovering right around the 20,000 units range. So it did decrease going into the year, and then as we got into the new year of 2020, the inventory hit a peak again. Since 2020, the inventory has continued to really decline until about December of 2021, where it did start to increase again as far as total inventory on the market. Now, keep in mind, total inventory does include vacant lots, mobile homes, commercial properties, all that as well. So, but it did increase, and it has been now hovering a little over the 10,000, right around the 11,000, 12,000 units range. The line below in blue is actually the number of new listings coming on the market. And as you can see, alongside with the inventory increasing as far as active listings, the inventory of new listings coming on the market started in December as well, and has increased really in through this last month. The only reason that the blue line takes a dip in May is because we're only through the first week of May, and that's just telling you how many we've actually had. So you take a look at the chart over on the right-hand side. In May 2019, we had 3,700 residential new listings coming on. In May of 2020, we had 3,400 come on. 2021, 4,200 come on. And then May of this year, as of right now, with the first week, we already have 1,000. So if we keep pace with this, we'll actually be hitting all-time highs of the last 4 years for this month. As you can see, the all-time high for this was back in February of 2020. We haven't had anything that would be on track for our total inventory or new listings coming on the market for this month since then. So I hope that helps and gives you guys a little bit better idea of what the market is like. But the big thing about this chart that I find so interesting is that the blue line is inventory of new listings. So really, the new listings coming on the market has been the same or pretty close to the same for the last 4 years. Inventory has been steady. It's the demand that I think is what has increased quite a bit over the last 2-3 years, which is why inventory has continued to decrease. Obviously, we have millennials coming on into their prime buying years for first-time home buyers. So I think that big group of us millennials coming in has really been what's contributed to the high demand going into the market. I do, however, think that there is a piece of FOMO to this as well, and I think it's only been getting worse with the interest rates in the markets the way they have been, and all the stimulus we've been getting. All right, moving on to interest rates. As of today, the interest rates are at 5.404. According to NerdWallet, that's up from 5.18, so that is up almost 30 basis points. Bank rate has it going from 5.41 last week to 5.54 this week. That's up 13 basis points. So we're hovering right around in both cases, right around the 5.5% range. I think we are going to see those rates go higher now that we have seen that the Fed came out with a 50 basis point hike, as well as the 10-year bonds now over 3%. Usually mortgage rates follow the 10-year bonds pretty closely. They're usually around 3% above the 10-year bond rate. So we are looking at interest rates potentially going up to 6% in the next month or so. So for all you buyers out there, keep that in mind. If you're looking to get a home and need to do it soon, I would try to lock in those rates as soon as you can, because the rates are only going to go up even higher from here. All right, so before we get into the stories, more and more of you have been reaching out to me with questions and comments about these videos, and I wanted to first thank you all. I love hearing your feedback and the comments, but there's also a growing number of you reaching out who can't find what you're looking for on the market, or are stuck in what we call the catch-22 in real estate. So you can't sell without having something to buy, or buy without selling first, obviously. So these are obviously real problems for many of you right now on either side, buying or selling. And it's also been a problem for me as an agent in the last few months as well, because it's made it difficult for me to help my clients. So over the last couple of months, I started working on 2 programs, one for buyers and one for sellers, that eliminates a lot of the uncertainty and stress with a few unique solutions to these obstacles. So if you're nervous about getting stuck with two homes, none at all, or you really just can't find what you're looking for on the market, you can check out those programs with the links I put in the description below. All right, let's get right into these stories. So this week, the mortgage applications increased in the latest MBA weekly survey. I'm going to just give you a bunch of these stats, and I didn't highlight any of them because I thought all of them were pretty important as far as the leading indicators of what's going on in the market. Mortgage applications increased this week for the first time. The last several weeks, they have been decreasing. This week, they did increase. I think that is because we finally got the word that the Fed is raising the rates, and that everyone knows that rates are only going to go up higher from here. So I think this is an indication of a big rush for buyers to lock in rates before it's too late. A couple stats. The average 30-year fixed rate was 5.36%, 49% drop in refinance activity, which that's been decreasing for a while now, but I think we're seeing that pretty much is going away, which is leading to the layoffs. Purchase applications, conventional FHA and VA loans were up 4%. However, when you break it down, FHAs were only up 0.5%, VAs were only up 0.1%, so that leaves the rest as conventional. ARMs remained unchanged at 9.3%. The good news here so far is that it's staying below the 30% mark that we saw in the mid-2000s, which eventually led to some issues in obviously 2005 through 2008 and then decline. And then refinance activity decreased, obviously 33.9%. Just wanted to give a perspective as far as where we were 2 months ago to where we are now and where we might be going next. If you take a look at, we'll just say in the last 2 months, the average, we'll say an average home price around 300,000, which is really not the case anymore. It's usually about 400,000, but if you were to take out a loan 2 months ago at around 3.5%, which is, was still up from our lows of 3%, 3.5%, your monthly mortgage would have been around $1,350 a month. Now that rate is currently right now would be up to $1,700. So a $350 per month increase already at 5.5% interest rates. Next, we're going to 6%, which would bring it up to almost $1,800 a month. So we went from, just in a matter of 2 months, we're going from $1,350 a month up to $1,800 a month. So that's a $450 increase in just 2 months as far as mortgage payments. So you can see why, if you are considering buying or you need to buy, your best bet is to lock in those rates right now. But as I said, who knows what will happen? They may be just raising those rates just to give themselves some room to lower them again. All right, moving on to the CPI and PPI data. We are getting those on Wednesday along with the mortgage applications data that's coming out. All that's coming out on Wednesday, but I did want to give you an update on what the forecasts are right now for CPI and PPI. As far as our previous CPI data, we're at 8.5% inflation right now. I was expecting things to go higher, seeing that the PPI was at 11.2% last month. But it looks like the forecast right now is supposed to be 8.2% for CPI with a consensus of 8.1, meaning most of the people are agreeing it's supposed to come in at around 8.1. PPI forecast is 11.2% last month, and it is supposed to come in at 11% this month, which means that both of these forecasts are indicating that we've already hit peak inflation and that we will begin to reside. What peak inflation means, though, is that the prices are no longer continuing to go year over year. So while the forecast is suggesting that we've hit peak inflation, we are still rising at 8% year over year. We're just not continuing to increase that projection where we're compounding the increases year over year. So while it's still going to remain inflated and high and prices will continue rising, they are not going to be rising nearly as fast as they were. So that's something that we're going to find out on Wednesday as well. Next story, Redfin. More sellers drop their prices, but buyers find little relief. So the big things to take out of this story, the amount of sellers who've dropped their asking price shot up to a 6-month high of 15%. That's up 9% from a year earlier. The 5.9% increase is the largest annual gain on record in Redfin's weekly housing data back through 2015. And the big takeaway from this, at least that's what they're getting out of this data, is that even though price drops are becoming more common, most homes are still selling above asking price and in record time. And that is something I've been telling my clients and who I've been working with. But it is showing signs that that is starting to slow as well. So there's not quite as many multiple offer situations. Homes are sitting on the market longer. So we are seeing those things, but it all depends on the price, the location, the condition of the home. If it's a highly desirable one, we are still seeing some bidding wars, and they are usually selling over asking still. Next story, the housing market is passing an inflection point this spring on the way to more balanced conditions. This is according to Zillow. So despite Zillow having such high predictions for 2022 and 2023, they are starting to curb a lot of those predictions the other way now. Inventory finally began to rise in March. So as I've said, that is no longer a local story. It's increasing enough to actually begin closing the gap with inventory levels from a year ago. It now looks likely that inventory will notch year-over-year growth sometime later in 2022, which hasn't occurred since September 2019. But the more surprising thing here is that builders have been firing on all cylinders and with more homes under construction than any time since 1973. And this is where I said in the beginning that I was a little bit worried, because this includes 2008, where we were overbuilding. So that's a little worrisome. Zillow here comments afterwards, they understandably feel exposed in the event of a housing downturn. Yes, I would imagine, especially after coming out of something like 2008. I know a lot of the gurus and a lot of the people saying that we are, so many millions of homes behind. But some of the surprising data that's been coming out lately with the census is showing that we're at all-time highs for building and permits pulled and starts, as well as the amount of homes that are being built for rental purposes. So that's 2 or more units. That's where the big increases in inventory have been coming from lately. So it's not people building single-family homes. It's more for building rental properties. And that's what worries me a little bit, is I don't know if it's taking into account, we already have I know there was a rental deficit for a while, but in our local market, there's thousands of rental units on the market right now. So, they're not the best prices, but the units are there. It's just a matter of being able to pay for them and afford them. So that really wraps up the stories for today. The wall of worry, we have some new stuff coming out on Wednesday. Like I said, the mortgages, CPI and PPI data. That's going to give us an idea of where inflation really is at, as well as supply chain shocks, if those are starting to ease up a bit, which I think they are. So let's keep an eye on those things. But these are all the things that I'm seeing. As always, please leave comments in the comment section below. I love hearing people's takes and finding out what's going on in their markets as far as what they're seeing for housing. Are you seeing decreases in your housing market, price decreases? Are you seeing more inventory come on? Please let me know in the comments. That helps me a lot, and I love listening to your comments and what you guys have to say. So I hope to see you guys in the next one, and stay safe. Thanks for watching, and if you enjoyed this video, please hit that thumbs up button to let me know. And don't forget to register on my site to get access to loads of exclusive tools, data, and content like foreclosure and open house lists, buyer and seller guides, calculators, and access to our Southwest Florida MLS. If you have any questions, please don't hesitate to give me a call or send me a text at 239-310-5478. And if you prefer email, you can send one to rick@SWFLrelocationteam.com. Thanks again for watching to the end, and I hope to see you next week.